Hello, I'm Joel. I'm the Chief Market Technician here at the Market Ladder, and today we're going to talk about analyzing the charts and trading with ETFs. All right, as always, there's a risk disclaimer. I am not a financial advisor. Investing in the stock market is inherently dangerous, so please take any trades at your own risk, and thank you. Also, as a quick note, please do not trade anything you see here today. Everything you see here today is for demonstration purposes only. Thanks. All right, so here's a price chart of the Apple price, and you can see it's basically just a squiggly line going from left to right. So a chart like this would be almost impossible to trade, which is why traders will use indicators. And so I've used that same chart that you just saw before, and I've put on all of my favorite indicators. This is a basic look at any chart I would look at before I even considered to place a trade. So let's briefly go through these indicators that I've added. One of which is this moving average right here, and this goes right here if you can follow the arrow. So all that is a moving average of the closing stock prices over time. So they just take all the past closing prices, average them up, get a number, and they plot that number, and then over time you get this line right here. And so what I like to do is I like to put on some more important moving averages, and it gives me a quick visual representation of whether the stock price is going up or down, as well as whether the stock price is holding above or below that moving average. And then if you can see this green window here that kind of follows that moving average, all that does is gives me a quick representation of whether the price action is generally above or below this moving average. Then if you look, you see this green shaded bar here. It's a little bit darker green than the other green is. Well, that I've put in as a support zone. And so what happens is when price comes down into that support zone from above, it often finds support and it gets pushed back up, as it did in this case. And then let's see. The other thing is that if you remember from the last slide, it was just a squiggly line, but now we've got all these white and red, what we call candlesticks, and what they are is a visual representation for what the price action did during that week in time. So if I was to look at this candlestick, for example, this is at the beginning of 2023, I can tell you how that week opened and closed, what the price action did within that week. So in this case, it opened up here, it went briefly up, and then it came all the way down to here, and then it shot all the way back up, and then it closed below it opened. So I can tell you, I can tell you everything about every candlestick or what the price action did for that period in time. So it just gives you a quick representation of what the price action was doing. So that's kind of the cool feature of candlesticks. Now, down here on the bottom, of course, is the timeline, and below that timeline is these red and black bars. So every red bar or black bar is just a representation of the volume that's going, and that just means that volume for that period of time. So if we again look at this candlestick for that week, we could come down and say, okay, here's the volume for that week, and was it more than average or was it less than average? So it gives you an idea of whether the volume is heavy or light for that period in time, and volume means how many shares were traded during that period in time. Okay, and sorry about that. I've got one more thing I wanted to show you. Sorry about that. And then the last indicator here is the relative strength index, and that just shows momentum of the price action. So if you were wanting to place a trade, you generally want to see momentum either picking up or on the higher side of this yellow line, and that's again called a momentum indicator. All right, so let's look at one more chart. This is a Disney weekly stock price, and again it's just a squiggly line, so we're going to go ahead and add our indicators again, and then this is the same exact chart, but this time we have our indicators overlaid on the stock price. So now we're going to make some judgments as to whether it's bullish, and that means I would think that the price action would continue to go up, or it's bearish, and that means I would expect that the price action would continue to go down. So anytime you put a moving, or I'd say for this purpose, this moving average, it's going in the downward direction and price action is below it. So that's a bearish indication. And except for this little period in time here, price action generally stayed below it. And so you can see how well it did on predicting that price action would continue to be bearish all the way from here down to here, at which point in time it did go above, and then it stayed above this moving average. So that's one indication that we've put on there. It did show it would be bearish. Then the other indication that you can also look at is this momentum indicator. And if momentum is down and below this yellow line, then momentum is thought to be bearish. And you can see how we had bearish momentum that continued all the way until right here. And again, this time right here where it poked above the yellow line coincided when price action poked above the moving average. So you've got those two indicators agreeing with one another that the momentum or the price action has changed from bearish to bullish. And then the last thing I want to show you on this chart would be, see how the volume is kind of picking up right through here, and then it started to go up, but it didn't hold above the moving average. It came back down. Then again, the volume again is picking up right through here, but this time when it poked above, it did stay above. So sometimes volume can help you decipher if the move that you're seeing is a realistic or a justified change in character from bearish to bullish. So in this case it was, because it went from here to here. We also had this indicator, so we now would say our trades would be looking for bullish trades, that we expect price action to continue up. Now the only caveat to that is, now see how price action has come to this resistance zone. So I would not place any bullish trades in this area until this price action got above this resistance zone. So that's how we looked at trades, and how I look at any trade before I would possibly make a trade. I look at these kind of indicators. All right, so here's an example of an ETF, because I don't trade stocks, I trade ETFs. And so I just want to show you that this ETF, which happens to be TLT, which tracks the 20-year Treasury bonds, looks a lot like the last chart we looked at. And you can place the same indicators that you can on the stocks, and you can also trade them the same that you do with stocks. So I just want to show you that even though you may not have heard of ETFs, a lot of people haven't, they chart and they trade exactly like you could a stock chart. All right, and also the reason I trade ETFs is because they offer more capabilities than stocks. And if you remember the last chart, we did a 20-year Treasury bond was the example, and that was TLT. But I want to show you that TMF is also an ETF, but it's a bull ETF 3X. And what that means is that this also tracks 20-year Treasury bonds, but in this case, if these bonds go up by 1%, which would be tracked by TLT from the last chart, then TMF right here would go up by 3%. So that's why we call that a leveraged bull example. So if what you're looking at would go up by 1%, then the leveraged 3X would go up by about 3%. And it can also trade in the other direction, which is another reason why I like ETFs. So if you wanted to place a bet that TLT or 20-year Treasury bonds weren't going to go up, but they were going to go down, well, you could purchase TMV, and this is a bear ETF, and it has a minus 3X description. So if TLT or Treasury bonds go down 1%, then TMV would go up 3%, or roughly 3%. And so that's a neat feature of ETFs. That's why I trade ETFs, because you can get leveraging, you can get more bang for your buck, and you can also trade in opposite directions of what you're looking at. And of course, you have to be careful, because when you get these leveraged products, you really have to know what you're getting yourself into, and you have to use your stop losses appropriately, which is what we'll do every time with the market ladder. Okay, so in summary, trading only makes sense when you have multiple indicators and they're all pointing to the same conclusion. And then the other thing is that I trade and we trade on the market ladder only ETFs because they trade like stocks, but they offer you a lot more capabilities with trading in either direction, as well as offering the leverage product so you can get more bang for your buck over a shorter period in time. All right. Thanks for watching. I hope you've enjoyed this video and found it informational. As an old Star Wars fan may tell you, may the trades be with us. Okay. See you next time. Bye for now.